Hello everyone. Good to see you.
Yeah.
I didn't think you were going to show up today. You had a conflict, but we had a time zone change in Europe.
Yeah, so we're good.
So
yeah.
it's all good. So, hey, we've got a lot to talk about today because we had a big day yesterday with the FOMC. They did a rate cut as expected, but the markets were goofy. That's the only way I can really explain it.
I think I expected this because what's his name, Jerome Powell. He made a comment in the after speech where he said that he was asked whether December rate cut was a foregone conclusion, or was he worried that it was a foregone conclusion because the market's pricing it in, and he said it's not a foregone conclusion.
No.
And then I think that got the market thinking, and then Meta posted their results, their earnings, and as expected, it's dog shit. And Facebook has made a business out of exploiting well-meaning, gullible people, and they're no longer falling for it. And they went into this AI thing, and they've screwed that up, and so that sort of caused the market to wet the bed a bit, and kind of as expected, that caused Bitcoin to go down and nab that 108 liquidation level. Where's the depot?
Yeah, we'll show that in a bit.
Okay,
but I think that there's something I wanted to ask you about. I'll remember later. It's okay. So we had some good price action.
Yeah.
You are one of those people in the camp that you think that's it for this year. We're not going to see another high for Bitcoin this year. Is your personal opinion?
I think we're going to nip up and take the 117,000 liquidation level, and then it's a short for the rest of the year. Yeah.
How low do you think it could go?
I think Bitcoin's done.
Oh boy.
I think 80k.
Oh boy.
Yeah.
80k.
Yeah.
Oh boy. Oh boy. Well, you have to be a pretty brave man to short Bitcoin when you look at the overall chart, right? But you never know, and nothing goes up forever. Now, there's always a caveat because we're one tweet away from Bitcoin being added to the U.S. Treasury or something crazy, and it could go. But
we've had now South Korea and France both motioning that they're going to create Bitcoin treasuries. Didn't affect the price. You've had two Bitcoin treasury companies liquidating Bitcoin to pay the bills, and there's a lot of those. And Saylor's strategy MNAV is now down to 1.32. And when I was in Bali looking at it first back in August or July, it was 2.5. And at 2.5, Saylor promised that he wouldn't issue any more stock below an MNAV of 2.5. Then in their next monthly report, they deleted that clause, and then they promptly issued stock at 1.9, and it's been falling ever since. So
well, even Andrew Tate said that. I think I saw something where he said it was going to 25k, and he could be right. It could happen. I don't know. And with supercomputers and AI, if they crack codes, it's all over for crypto anyways, because your wallet's going to be hacked.
There's a whole argument about that. So quantum computers, if they ever work, are perfect for cracking RSA encryption. Now, fear not, because we now have elliptic curve encryption, and in theory the Bitcoin algorithm could be updated to use that, and that's even harder to crack. But the thing is, there's an arms race between quantum computing and decryption and encryption, and there always was. The Second World War was famous for it, and in the end, the decryptors always win. But the trouble is that once you crack RSA, and particularly once you crack elliptic curve, it's not just Bitcoin; it's every cryptocurrency, every password, every online transaction. Everything, and we're back to writing on sheepskin.
That's right. Yeah. We're going back to the caveman days. So, civilizational reset. Hey, let me share. I should be sharing my screen now. So we've got our gravity chart up here. This is for our fund, the Rogue Trader Academy Fund. If you want to check it out, you can always go to grvt.o. There we are. And then there's other. These guys just started the other day. Wow. They've only been alive for a few days. So
okay, so
that's going to change. So that's cool. You can check out everyone else's performance, but hey, invest in ours because
what's our share price now?
We're just nice guys. I don't know. Hasn't changed a lot.
Okay. It's about 1.1 then. So
no 1 point. Here. Let me.
Yeah, it's important. People should know.
Share price $1.12.5.
Oh, nice. So we're 12.5% up since we started the vault.
Yeah, nice. We did have a higher. A couple of these little dips were because we were not taking much of a position because there was a lot of
Yeah.
uncertainty.
Yeah.
And I did make a keystroke error too.
Nice.
Because I'm not used to the pointing and clicking type trading,
Okay.
this retail stuff.
Yeah.
But whatever, it wasn't a big deal.
Good old fat fingers.
Yes. Here, let me make this screen a bit bigger here. Hello. There we go. And I'll make this.
It can go both ways of a fat finger trade. You can either be very lucky or very unlucky.
Yeah, that's true. Yeah, it was more of just a keystroke entry. Like I'm not used to it, typing in 6 digits for a price.
Okay.
So, anyways, you can see our position here. Right now we're long at around 110.5. Roughly around there.
So we had some buy orders in, right, and which got taken out by this peg down yesterday.
So this move happened when we were sleeping, and we had some orders at 108 and change. And we had a small position before that we added. You can see we have an order down here to buy around 106 and change.
Yeah.
Why? Well, just because that's where the previous kind of support areas were, and we had liquidation levels there, and we'll show that in a second.
Okay.
So we had a good bounce this morning. We actually sold some right here, a small amount. And what I do is when we're in a range, when there's uncertainty, we're not in a trend, we're just going sideways. I'm just going to lightly buy and then lightly sell on the way up, and just back and forth in the trend until that changes. So let's just say, worst case scenario, we wake up and it's the apocalypse and we're down here. Our average price is probably around here and it's looking like it's going to go south. Well, at that point, we have to make a decision. Do we cancel these orders, these big orders, and add to it and bring our price down? Do we flip it and go short, thinking, hey, 100,000 is inevitable? Take a hit and go. And that's a personal decision you have to make. Yeah. And it will depend on, was there a catalyst? What's the price action look like? Where's liquidity levels? Where are the options, open interest levels at? And we'll take all that into consideration. But right now, there's no panic. Look, we're just in this range. So even that big move last night, in terms of the entire range, it's really not a big deal.
Yeah.
So let's take a quick look then at the liquidation levels. I'll let you drive if you want, but this is the 24-hour chart.
Yeah. Okay. So we were looking at we were looking at this liquidation level here, and that's to me in our little trading pit we have here. I called out 108 as the bottom, and I was almost right. It just got down below 108. But that seemed like an obvious take to me because it tried to take this liquidation level earlier in the day, didn't manage it, and then on the back of the Jerome Powell speech and Facebook and all the rest of it, and the fact that the whole creaking garbage can of AI is starting to smell, right, and people are getting wise to it. I mean, there's still nowhere else to put your money, so they're still pumping money into this AI garbage. But but when this news came out that you can now rent a robot for $500, and it's going to wash your dishes and do you sexual favors and
vacuum the floors and carry the groceries. Yeah.
But in order for it to work, it's got to be connected to a data center and using gigawatts of power to power its brain that's miles away. Meanwhile, the NSA, CIA, and everyone else can spy on you.
Yeah. Everything you do will be monitored.
This is going to be garbage.
Yeah. And if you look at the 1 week liquidation map, you can even see that 108 level even more clearly.
Yeah.
And again, when I looked at those, there you can see that big level it punched through last night.
It was like waiting to be taken, right?
So that's where we put our orders. And if we're trading options, which we obviously don't do on Gravity yet, that's where we want to maybe be selling puts on the other side of that plunge down.
Yeah.
Or put spreads or risk reversals.
Yeah.
And on the upside, we do expect it to probably punch up, 113, 114, 117.
Yeah, this is all right for the taking. But I think once we get here, we're done. We're definitely not going to see. You can make a poly market on me if you want.
Okay.
There's definitely not going to be another all-time high this year. No way. 0%. Right. So.
Well, you've got 2 months to be right, so that's working in your favor.
You can short sell Bitcoin at 117 without risk.
Oh boy! Wow! Wow!
And I'm putting my money where my mouth is. I'm selling puts here.
Calls.
Calls in massive quantities. I'm covering them because margin and so on. But I mean, on a 1 Bitcoin account, I'm selling like 10 Bitcoins of calls here. I'm really going for it.
Balls to the walls.
Yeah.
Wow.
Yeah.
And ideally you want to do that when it's pumps up a few $1,000s more to get more premium out of it.
Now's the wrong time because it will recover. There'll be some. Well, we'll go through expiry and then it'll drift up over the weekend. Asia will buy it. It's the same pattern, and then the market will forget how fearful it is, and then suddenly there'll be something else and they'll be terrified. Right? It appears that the talks between Xi Jinping and Donald Trump seem to have broken down. If we're reading between the lines. With Donald storming out of the meeting early and jumping in his plane and flying away.
Didn't you read his Truth Social post this morning? It was rosy.
Oh, really?
He said everything's great. We agreed on this. We agreed on that.
Well, they've got to pump the stock market because his only hope is to pump the stock market, right? So, yeah, I don't believe any of it.
That's the 3-month chart there.
Right, and looking at 3 months, maybe even 6 months, but 3 months we've had this high and then an all-time high and then. Terrible. This is going to have scared everyone, and a lot of people who could have gone long can't anymore because they haven't got any money. Because of this.
That was huge.
And I reiterate, the only people left trading crypto is Wall Street.
Yeah.
Right. I mean, in general, and there's a few people left.
Yeah, and some whales.
And you have to understand that Wall Street sees all crypto, including Bitcoin, as just garbage to be traded. They don't see any value in it whatsoever. Right. So it's going to trade. It's going to trade like that.
And this is a really good point. So if you go back to the chart, so I said, all right, hey, this is where we've got some orders. This is our position. This is our general strategy. And how did I come up with that? Well, I was just looking at the basic support and resistance. I'm looking at the liquidity levels. It's very important to understand that these are just guidelines. We don't look at that liquidity chart and say, well, it's definitely...
Except that it's 100% accurate all the time.
Lately it has been. I'll give it that. But we just want to use that as a guideline. If you want to put Fibonacci's on there, if you want to use Elliott waves, fine. But all these things should just be a guideline. And the problem with Bitcoin is it's not a real asset in terms of, if you and I are trading Microsoft, well, Microsoft has revenues, they have data centers, they have products, they have this, they have that. And there's a PE ratio, there's valuation to it. Yeah. It has years and years and years and years of history. With Bitcoin, besides a handful of whales and some big players and, tweets being added to Treasury, it's a crapshoot. Yeah. None of these support levels that I'm using are necessarily going to hold as well as you expect it in a traditional market. Oil futures or something. It's just based on air in a way. It's
an asset that's in constant price discovery. And that price discovery is based on sentiment. And Bitcoin maxis will say, my apologies to anyone if I offend anyone. I'm good at that. But sovereign treasury funds and ETFs and so on. Yes. And even if Bitcoin goes into sovereign treasury funds, it can still go to zero. Right? Governments are not brilliant investors. They don't guarantee anything. Right? They manage to destroy every currency they touch. They manage to destroy every economy they touch. They manage to destroy every society they touch. You can be sure as hell that they're going to destroy every asset they touch. Right? So I personally hold no store in any of that nonsense about sovereign funds, other than for short-term price movements.
And we can see the price really coming down.
On my words, everyone's selling it.
Yeah, sell. Richard says sell.
But it will bounce. It'll definitely bounce because it has to. The options market will force it to bounce. Because people will sell calls, and then people will come under pressure. They'll be forced to hedge those calls. So it will bounce. But it's going to be. It's not going to be a continuing up market anymore. We're going to have to trade it.
And on the way down, if it does break through $100,000, which I think it's probably inevitably going to do, we might spend all of 2026 wondering if we'll ever break up above 100,000 again. And that's possible. Yeah. And I think on the way down, all you can do is use those prior areas of where it went sideways, support and resistance, round numbers. It's probably not just going to blast through 100K for no reason. There'll probably be some resistance around those big round numbers. But other than that, just you got to trade carefully. And maybe it is a year to be more short than long. I don't know. I don't know.
Well, I mean, the U.S. economy is collapsing, right? I mean, they're doing everything they can to pump the stock market, which is like the only thing left in the U.S. that's worth anything. And the entire U.S. stock market is based on Nvidia being worth $5 trillion. and Nvidia's best contribution to the global economy is sex robots, right? So, I mean,
household robots.
Yeah.
All right.
Right.
Why don't we check out immersive, and we'll just check out where the where the risk reversals are.
So looking at the options market, this is a tool I use a lot because I trade a lot of options. Here, this is an area that I value a lot, the 10 delta risk reversal. It tells me a lot about investor sentiment. So it's telling me that over the next couple of weeks, people are looking to protect their books, but they're willing to pay more for puts than they are for calls. So they think downside is more likely than upside, or they're hedging that risk. But under 10% for this number means that it's not egregious. It's not they're not terrified, right? They're just cautious. Being out at 3 months, this much negative at 3 months, that's kind of unusual. That's telling me that people are losing faith.
It's usually positive out in the future, yeah.
And at the money forwards, this is the implied volatility of the at the money options. Being above 40 these days tends to imply people are starting to get concerned. They're expecting volatility. So all through the summer, we saw implied volatility of like between 32 and 36, which was kind of no different to in fact, higher. It's no different to a reasonably good stock in the stock market. 40 up into the 40s, people are starting to get concerned. Up into the 50s, then we become sellers because we know we can make money. So I think there's just increasing concern. We saw this is a graph of the volatility levels. This was just prior to the Fed announcement. So volatility rose before that and then sold off afterwards. We're starting to rise into the Friday expiry. It's quite a big expiry for October. But on the whole, the options market isn't giving any strong signals. I think the strongest signal at the moment is just people's tiredness of markets and valuations and some lack of momentum, really. The momentum indicators on Bitcoin are starting to show negative.
Yeah.
And as goes Bitcoin, so goes every other crypto, right? So be careful of the downside on ETH and Sol and all that stuff.
And we've seen in the last couple of months, every time we've gone up, it's been a straight ride down and a fast ride down. Yeah. If that's happening in a stock, I'm starting to be pretty bearish on it.
Yeah. Because you kind of get the impression that people start to see a couple of days of rallying, and they pile in with leverage because they're desperate to make their money back, right? And the market sees that and knows it, and it will kill them every time. Yeah. So this is a time to be patient and small bets. Yeah.
Well, I think we're hanging around 110,000. Again, I mean, our strategies, right now we're not taking any big positions. Yeah. We're happy to just be. We're down a couple $100 on our curves. It's nothing. We're just going to trade the range cautiously. We're going to assume this range is going to hold until it doesn't. Yeah. And when it doesn't, we'll make that decision. Are we going to dump it for a loss and go short? Are we just going to flatten the book and wait? Are we going to scale in and just keep piling in, thinking no, it's going to bounce? We'll just have to wait and see what happens.
There's something else we should show up here. I can bring it up if you want. This is the Max Payne chart. This can be quite accurate. Bitcoin options. And again, I talk a lot about options, but it's actually very instructive. There's another CoinGlass page. Here we are. Max Payne. Okay. So Max Payne is the level at which Bitcoin expires to cause most pain for options traders. And so at the moment, it's about 114K for this expiry. And then it's about 108K for the rest of the year. And the reason I mention this is that the market, for technical reasons that we can go into some other time, the market tends to get dragged towards Max Payne at expiries. And that's just because of the way that options market makers are forced to hedge. And so they tend that the price tends to congregate where it's going to hurt everybody the most. And so here we are at 112 actually for this expiry. It was 114.
Okay. So we're currently trading at 110, so we could expect it to push up a couple $1,000 to cause match. I mean, for tomorrow's expiry.
For tomorrow, you could, and it might even overshoot and take out those liquidation levels. We'll see.
And that's when you'll be selling calls.
Absolutely, yeah. And then what we've got here, what's this? 7th of November,
next Friday.
111k. That's $1,000 above here. Mm-hmm. The next week after that, 112k, and then down to 108k for 21st of November, and then back to 112. So this, where we are now, is kind of where the market wants to expire every Friday for the rest of the year. Yeah, and then we're seeing a little bit of people selling. This was lower actually, so people are starting to sell calls now in January. And here's at 111. This is March next year, and then 115k for June next year. So if the options market is a guide, and the max pain is a guide of where the market's going to go, basically it's telling us we're in a range now for the next year, with no higher than 116.
Yeah. And this does change too, by the way. Of course,
yeah, I mean, obviously, the more people trade the options, that this moves around. But what's been interesting to me is over the past month, this hasn't moved very much. So it's not like anyone's taking big positions in the options market. They're just playing what the current range.
Okay, so the big test then will be to see if we hit max pain for tomorrow's options expire, which is tomorrow morning on Friday. Right. Kind of 112, maybe a little bit higher than that. So a couple $1,000 up from here. So that'll be interesting.
I think it kind of tried. It tried to get to max pain, and unfortunately the FOMC sort of killed that. And it might try again. Yeah. It's also worth noting that there's max call pain and max put pain. The last time I looked, max call pain was 114, max put pain was 110. So we're actually right at the bottom of the range of max pain.
We're right there.
Yeah.
So that's the plan.
Yeah.
For now, I think we're happy to. Every time we come back here, we have to rescale
the gravity team can fix.
Rescale the chart. But again, I'll just reiterate that.
Trade the range, right, until it breaks.
Until it breaks, because nothing we're seeing here, this big move down, relative to what was before, is not really a big deal. Yeah. If you took a position right here long and went here, well, it probably feels like a big deal to you. But keep your size light when there's no conviction in the market. Yeah. And just lightly buy, lightly sell. I mean, that's what we do. Whatever you want to do, you can do. But we're not going to go big until there's some real big event. Yeah. If all of a sudden something happens to it and it plunges down to 85, well, you can bet I'm going to load the boat down there, waiting for some form of mean reversion. Yeah,
buy 85, sell 100, and then short it all the way down to 60.
Who knows? Who knows? But one thing's for sure is Bitcoin never fails to disappoint with surprises.
Yeah, exactly.
It's one thing after another. Anything else you want to add today?
Other than scaring everyone, no. I think that's it. I mean, I think I've made my feelings felt on the macro situation. I think the final thing I'll say, and I'm going to say this every week, is that there's a lot of talk about Bitcoin being digital gold. It's not. Bitcoin is digital risk. Yeah. If you want safety, you buy gold. If you want fun, you buy Bitcoin.
I agree. Yeah. There's just too many things that can affect it. It's a digital asset. Yeah. This is still relatively new in the trading world. 10 years. It hasn't been around a long time, and
it's only been sort of embedded in Wall Street for a year, right? Well, a year and a half. And it's only now that they've just passed a law to allow Bitcoin subscriptions and redemptions to ETFs, which actually means that a lot of long-term whales are definitely going to be swapping their Bitcoin into ETFs, which means the ETFs will own even more of the Bitcoin, and that means that as they get traded in the stock market by stock market traders, Bitcoin will behave more and more like a stock.
Yeah. I mean, it already does have a very strong correlation to the NASDAQ. Yeah. So it's just becoming one of the assets. Okay, I don't think there's much else to say. I think we're going to wait and see what happens at tomorrow's expiry. We're going to wait and see what happens during the week. So until then, we're just going to trade the range and
buy low, sell high.
Buy low, sell high, or sell high, buy low, whichever way you prefer to look at it. But we've looked at liquidation levels. We know what we're expecting.
Yeah.
And we've seen the max pain on the options, which isn't actually all that much different from the liquidation levels.
The thing is, all of these structural things work together for a reason, and you'll find that the Fibonacci levels will actually also coincide with them, and so you can pick which explanation you want for these phenomena, right?
Yeah.
I think in reality, it's the options market that drives it.
Yeah, certainly in traditional markets, and options are catching up in the crypto market as well. Okay, that's it for today. Hey, thanks for joining us, everyone, and we will catch you next week.